Hey traders, Bish here at Long2Bear Trading Institute for your market wrap week ending 8th of February 2019. Just going to go through what happened last week and give you some current opportunities coming for the week ahead. So let's talk about the key themes last week and what happened in the markets. So we had PMIs, China and US trade talks, and also the big one was Europe weakening. So let's talk about Eurozone. Well, their growth was reduced by the EU from 1.9% to 1.3%, and that kind of hit sentiment on the European markets. We saw German industrial production fall in December, and just to cap that all off, several companies reported disappointing results. So let's just talk about the European Union. Well, they cut their forecast this year significantly from 1.9% to 1.3%. They used the catalysts of obviously the China trade deals and, of course, Brexit. But when we talk about the biggest economy in Europe, Germany, they cut their forecast, their GDP forecast, from 1.8% to 1.1%. And that's the fourth month in a row. We saw German industrial production fall 0.4% from November. Also, manufacturing orders fell 1.6% during the same time. Let's talk about the Bank of England. Well, they cut UK growth expectations from 1.7% to 1.2%. They left their interest rates unchanged at the same time. They're using Brexit as the catalyst for the slowdown in the economies. Let's talk about US. Well, US, we saw stocks really unchanged for the week. President Donald Trump came out and rattled the market a little bit by saying that he doesn't intend on meeting Chinese leader Xi Jinping in March for their trade tariff talks. That probably caused more tensions between the two nations, and also the market reacted. Global PMIs. Well, that's a big one here. Global PMIs actually hit a 29-month low in January of 50.7. We see output orders are close to stagnation. Global exports fall for fifth straight month. And also 11 out of 30 countries are now in manufacturing downturns, and that includes China, Germany, and Italy. So things in Europe and also in Asia are starting to slow, and it's just a matter of time. Let's just see if US follows. If not, then it remains resilient. So let's look at what happened over the global indices. Pretty much unchanged week, really. It's been quite a flat week. Good for scalping, but you can see here the S&P 500 was 1.35 points up, so it's like 0% change. Dow again is nearly just a 0.2% change. NASDAQ at 0.5. We saw the composite just down a little bit by 0.3. So you can see here, it's, US has actually been quite flat for the week. It's not been big swings. Europe, however, had a really strong down week. We've seen the DAX, the Euro stocks, CAC 40 having really strong down weeks at 2.4%, 1.1, 1.1% down. FTSE main again just remained flat for the week. Asia, as in Hang Seng, and China, there was a Chinese holiday, so it remained flat also. Currencies. So currencies, well, you would have been good to be long some dollars this week. It was the strongest currency against all of the majors. So against euros, the sterling, even the yen, Swissy, and the Canadian dollar, US dollar has outperformed all the majors. So being along dollars this week wouldn't have harmed you in any way. So let's just see what happens next week, and if the dollar remains bullish over the next coming weeks. So here's global PMI, just give you a background on what's happening. So global PMIs we've seen has deteriorated over the coming months. You can see here, just simply at the chart, that we are starting to roll over in the global PMIs here. Let's talk about the US now, and also global manufacturing. So we can see global manufacturing in the blue line here. So global manufacturing is starting to pull back. US PMIs remained resilient, but I think that it will start to go in the direction of global PMIs, as it will do. So I think this is a theme that's going to come in the next 6 months or so, and we'll start to see the US starting to roll over and starting to not diverge as much as the rest of the world. Here's your Eurozone composite PMI. I can see here it's now coming down to contraction phase. Another few months of negative PMIs, then we can see Eurozone going into a possible recession overall. And here you can see the main countries PMIs, and we're basically seeing France, Italy, and Germany starting to roll over. Spain has remained resilient out of the Eurozone countries, but the main focus are going to be those three big countries in Europe, which is France, Italy, and Germany, and we're starting to see some stress in their PMI levels. This is just a PMI rankings board. We can see who's in contraction, who's in expanding phase. But if you just look at the world at the top, world is starting to reduce. It could go into contraction phase in the next few months, maybe up to 6 months. North America, as in US, has remained resilient, and we're still at the expansion phase of the global manufacturing. So overall, we're seeing PMI starting to reduce and possibly go into contraction phase. And if that happens, then we could see probably a recession coming through in the next 18 months or so. We've already seen Italy basically in recession. You can see at the bottom here next to Taiwan and Turkey. We're at the contraction phase in Italy. China's there as well, and that's a big worry, being the second largest GDP holder of the world. They're in contraction phase at the moment. So, but the rest of the world is looking quite resilient. So let's just hope it carries on like that. So we're just going to go into some charts just to see what the opportunities up to the coming weeks. I'm going to be probably looking at some currencies as well as some indices. So I'll see you there. So we're going to start off with the S&P 500 chart weekly. So again, we had a flat week for the week. We closed as a doji here. So that gives us a bit of indecision what's going to happen in the coming week ahead. I personally think that we're still going to have a bit of a pullback. I would like a pullback around to the 25.20 level. That would be a good level for a take profit. So let's go into the daily. Let's just see what actually happened. So the 250-day moving average is pivotal. We've seen it here. We've got every time we pushed up against it, we've been rejected. Again, we got rejected and we came slamming down for the past month of December. I mean, look at that. Could it happen again? I mean, we got lower highs going on, so it's a very big possibility, of course. I would like a pullback going in. I actually thought it was actually happening on Thursday. We saw this rejection, and then we came down in the sessions, closed negative, and then again, during overnight on Friday we were negative, and then we got propped up in the last couple of hours of trading, and it's quite weird because on financial Twitter you see some rumors going on that the Fed actually said they're open to unlimited QE, which made the stocks quite positive. I mean, in the grand scheme of things, if the Fed were
looking at unlimited QE or open to it, well, that should signal that they don't believe the economies are quite as strong as they thought. So it would be interesting to see if this up move here was a bull trap or not. I still remain bearish. I got stopped out on my position in the week at 27.15, and then I initiated another position short at 27.31. So if you see here, that's when I initiated the position, and then we had a good 50 points lower. I mean, obviously I'm looking much more bigger targets all the way down to at least a 2500 to 2480 level. But I got stopped out yesterday during the session. So my stop was just above this high here at 2702, and we poked above it during the session, late in the session, and I got stopped out. I am still looking for another shorting opportunity, maybe higher up. I mean, I might even come back in again on this pullback. So 27.15 or this gap fill here at 27.24 would be a good opportunity maybe to go short again. Confirmation of any shorts for you guys out there would be a daily close at below the 26.90 area, and then initiate shorts. First target at 26.40, and again it's the same as last week, 26.40 down to 2600, 25.50, and then down to the 24.80 area. I mean, we could easily go and double bottom and retest, or even go lower, but obviously I'm taking these levels at a time, and if we do break the low, the December lows, then obviously then I'll be looking to initiate shorts on another rally attempt. So for the moment, for the last few months, it's been selling rips. So if you just be patient and not being too emotional, then you could actually get some really big moves out in the market. Okay, so that's my thoughts on the S&P 500. It's pretty much the same as the Dow Jones and the NASDAQ. So I'll show you that in a moment or so. Another quick thing I need to tell you, I do post charts on my Twitter, and that's this at Bish_Gupta. So follow me on Twitter. You'll see some charts that I always post, not related to this video as well, and just my thoughts on what's going on throughout the whole week. I'm always on Twitter, so you can always message me on there, and I just post some charts. So I'll post some charts about the Euro USD on Monday, where I thought it was going to go, and I'll show you that it's come to the area that I have of interest, and also other charts as well, the yen, and also Euro yen. So definitely have a follow, and you'll get some insights as well on Twitter. So let's just look at the Dow Jones. So Dow Jones again, we broke out this wedge coming to the downside. I mean, it's still bullish. I mean, we've got 1, 2, 3, 4, 5, 6, 7 weeks of pure green candles. Again, like I said, I like the downside. I like it down to these levels, to the 23,570 to the 23,100 level. If we go and test these levels at the 21,700, then so be it. But these are initial starts. I mean, if you was to short around here and stop at the high coming down, you can't go wrong. It's a very good risk reward ratio. If we look at a daily, so it's quite interesting. Dow was the only index in the US that held its 250-day moving average. It came down, tested it, and it's now rallied off it. Well, if we look at the quickly, the SPX, we went above it, came down, got rejected. Now at the NASDAQ, we came above it, and then we got rejected again. We got lower highs. I do believe that we are due a pullback. I mean, this again with the NASDAQ, you know, look at these levels here. I'm looking at the 6400 level as a good takeout profit. If we was to initiate a short, look at a close below 68.16, 68.15, and target around the 63.50. Well, yeah, you could say 63.50, 6400 level would be a good take profit. So around about 400 ticks would be a good take profit. Let's look at FTSE. FTSE rejected to near its 250-day moving average. Sorry, this ain't the FTSE. Let me get the FTSE up. Okay, here we go. Right chart. Okay, FTSE rejected around this resistance level here. Obviously, fueled by the Brexit concerns, trade wars, and also slowing growth in Europe. You know, this all has an effect on every economy. So what do I see here? Well, I like this trade to the downside. I like it to probably test the 68.20 level. I think that will be your first target. If I just go to let's go to a 2-hour chart. Okay, so how would I play this? Well, I would say any rally attempt to the 50%. Okay, then you know, I'm just gonna change this color to white because I really can't see it. Okay, so any rally attempt to 71.26 to the 71.40 area. I would like to initiate a short with a stop above the 71.90 level, and then look for targets around 68.10 level, and then that would be my first target. You can look at this target here, just below at the 67.40, and then we can always go and test this at 65.37. But in the short term, you know, it's not a bad risk and reward. If we break out of this resistance here, then you know, on a retest, you know, go long, you know, with the stop below here at 71.60. So we would be going long around the 7200 area, 40 ticks stop loss, and I would say I would be targeting the 75.50 level. Okay, that would be my trade either way. So like I said, just be don't get married to a bias, you know, be open. So that's the FTSE. Let's look at the DAX. Okay, just get rid of all the drawings. Okay, so DAX, obviously with poor German data coming out, you know, it's not been good, has it? You know, and it's way below its 250-day moving average. We've got lower highs all the way down. Maybe this was just another attempt at a short. If you was to just maybe draw a fib from here, I think it's gone quite deep, hasn't it? Probably around the 75 level. Yeah, just over. So yeah, it's just over, but over the 75% level of Fibonacci, and then, you know, we failed, but it's still a lower high. So again, where would I play this? I would say, if it was me, pretty much the same as the FTSE. We've even closed below that moving average here. We've closed into this gap. I would say I'll be targeting these levels at 10,490 easily. I'll be looking at this level here as a first target, and then this lower here as second target. Because what tends to happen, sometimes you slice through the low and it carries on, okay, but then you might get a fake out. This is why I rather take targets at the lows and then wait, because there's no harm in waiting for another opportunity, because it could easily come down and snap back. Like for example, we came down here, closed below this low, came down and snapped back straight. It's just not worth it. So again, I would be looking to initiate a short on 50% retrace, or 62%. So around the 11,190 to the 11,130 mark would be a good shorting opportunity. Stop 200 ticks up, and then looking to target the 10,500 to the 10,300 area. Okay. Let's look at some currencies. Just before I leave you here, look at the weekly candle of the DAX. Look where it got rejected as well. Just look at that. Poked above the 250-day moving, 250-week moving average. Poked above it, couldn't close above. Big candle down. I mean, this is very bearish. I mean, I have no bias to go long here. So DAX is a very good short. And also, if you see, this is a head and shoulders pattern, which you can easily see here. Yeah, it's not quite perfect, but you get my drift. Head and shoulders pattern. So if you was to look at targets long term, just look at a trend line from just here. This is just rough, so you just want to clone it. You probably want to look at targets. Around these levels, but if you look at it, it's pretty much got those targets anyway. So which is why that head and shoulders is complete. But yeah, I mean, I think overall this is a weak market. I think we can go much lower. Easily down to the 9,000 levels, 8,000 levels. Who knows? Just at the moment, I would see this quite bearish, and I'll be selling on a pullback. So let's look at Euro USD. Favorite euros. Right. Okay. Well, if you see my Twitter during last week, I said around this level here at the 114.52 level that I expect it to probably come and test this trend line. We are there. So either this breaks this trend line and goes and takes out the 112, 150 level. From there, I reckon we can go and rally and then come down. That's just a map in my mind. I think we can go and test, or maybe take out the December 16 lows at 103.61. So how would you play this? I mean, you can see overall this is very bearish. It's within this channel as well. So it's very bearish. I would say you should be selling rallies. So any rallies that you get, you should be selling them. But on the short term, obviously, if you want your day trades, how would you say, then quite frankly, I'll be using my RSI tool here, and I think that we'll probably get some divergence. Yes, we do. So this always gives me an indication that we probably go higher. So if we get this diverging all the way down, okay, so if we get more downside, and this is why I think that we could probably go down to test these lows or take it out at 112 level, then that would be a good opportunity to go long. Okay, if it was me, I'd look for more strength in the euro. So I'll probably say euro to come here and a bit further down, and then come back up again. You know, and if I was to say my target level, it's a simple fib from the top, from the rejection. Let's say if it goes down to the 113 level, then 114, 114.37. I mean, look at this 50%. Look where it is at the it's at the 250-hour moving average as well. So it's good confluence. I mean, this is obviously not going to stay there, but at the moment, in hindsight, it's a good confluence area to go long and look for targets at that level. What else do we have? I don't see anything else really. I mean, sterling. Let's look at sterling. Sterling. Okay. From these lows, if we get a 50% to 128 to the 127 level, I could be quite bullish. Come and test these highs at 132, possibly higher. At the moment, it's in no man's land, so I wouldn't really initiate a trade here. I don't have any bias. Let's go out to daily. Let's see what's happening on the daily. Clearly downtrend, but I do think that we are probably close to a pullback. I do think this is a pullback, and then we lift off. I have this feeling that we're going to be testing the 142 level at one point this year. Sometimes you just got to have a view over a few months rather than a few hours, because sometimes the bigger picture gives you a better perspective of where a potential trade could go, and rather than just scalping, because end of the day, I mean, you're not always going to get good day trades. If the market decides not to move one day, what are you going to do? Force a trade? I mean, look at this. Just look at this price action in the last 3 days. I mean, it's pitiful. Just look at that. I mean, could you trade that? It's just I just don't have the bias at the moment. If you was to put a gun to my head and say, where would you think this will go? I do think we could probably go lower, but I think overall, I think dollar will sell off in the first half of the week, maybe all next week. That will give you guys a buying opportunity in the sterling or the euro at these levels, and then we look at to sell rallies in the future. So I'm just thinking, is there anything else? Well, you let me know if there's anything else that you would like me to look out for you. So again, slow week in the indices. I'm still bearish on it at the moment in the intermediate term. Euro, I would like a long at the levels I suggested. Sterling, I would like a long at the levels here, around the 50 to 62%. Dollar index, I think that we're going to sell off for, we could go a bit more higher and then sell off during the time next week. That would initiate longs in your sterling and euro positions. The FTSE I like lower, and also DAX I like lower as well. So we've got some good themes coming up in the next week or so. So try not to overtrade. Take your trades at a very good levels. And like I said, don't risk too much at this precise time. Just increments. 1%, 2% at a time. And these big moves do occur because volatility is quite high at the moment. So please like and share this video, and follow me on Twitter at bish_gupta, and I'll see you next week. Thank you.